Welcome, folks. Before going further, quick mic testing. If you can hear me, just write it down. That voice is okay. You can hear me, okay? I need to be sure first that you can hear me. Voice is okay. So please write it down that you can hear me or voice is clear or something. Yeah, just anything. Okay, thank you, AAFX, for confirming that. I'm extremely sorry because I didn't notice that delayed savings has started already. I mean, we have already the time has changed. Okay, so actually if you make it UTC -4 New York, then you don't need to change anything over here, but you have to calculate the time with your local time. So I didn't notice that, so I write it down that I will start at 9 a.m. New York local time, but actually I'm gonna start from 10 a.m. New York local time. Hope you will understand my fault. I'm sorry for that. Okay, and thanks for confirming, JM and Aaron, for sound clearing. Let's go to calendar first for this week, and you can see Monday we don't have any, what to say, no news over here. Tuesday we have core CPI at 8:30 a.m. Then 101 we have 10-year bond auction. Wednesday we have only the 30-year bond auction. Thursday we have 8:30 news PPI, and Friday we have some news around there. Okay, so Friday news I don't care, but Tuesday and the Thursday news. Okay, this is very important. The CPI and the PPI, both of them are really so important. Let's see how this week actually work. Okay, 30 people, and I'm fine. Thank you, man, Leonardo. I'm really fine. What about you, brother? What about you? So first thing first, in the weekend you have to start with the calendar. Okay, now you can go any other calendar. I love calendar. I mean Forex Factory. So I actually check the news from here, and I just change the settings, so only the red folder news and the medium impact news is showing over here. I don't go for the low impact news. Okay, so these two news I really care, so I just make it over here. So from Tuesday I guess we will get huge volatility. Monday it will be very slow market. It's better to avoid Monday, okay, because there is some choppiness because Monday is actually the accumulation day, so it can be very choppy. Okay, so if you want, you can easily avoid Monday price action. I believe that from Tuesday we will get the better price action. Now today's video is going to be very short. I believe within 30 minutes or 1 hour I will complete this. I believe that I will complete it within 30 minutes. Okay, but I was trying to tell what things I'm going to forget. Okay, so this week, as I tweeted, I will try to explain the mitigation block, and there's something I really look for if I ever trade the mitigation block. Okay, so this week will be fully concentrated with mitigation block only. But here today in weekly analysis, I'm going to go for the weekly bias. Now, actually, I don't go for the monthly chart at the middle of the month. I actually start from the monthly chart at the beginning of the month. But here, dollar index, I'm going to start from monthly chart because I would love to show you the monthly inversion fair value gap, how beautifully it is reacting. Okay, now this can be the reaction. That means just a reaction. It can easily reverse from here, but I would love to see market will expand much more lower. That's all. This low, look at this low. I would love to see market will reach until that low, or maybe the rejection block. That means the lowest body close candle, it can reach until that rejection block as well. So I'm looking for the lower run from the monthly chart for dollar index. Now let's go to weekly chart. So this is the weekly chart, and you can see this is the weekly fair value gap. Now I just turned off the monthly inversion fair value gap. So I'm just using every time frames mm, point of interest in every time frame. Okay, so monthly inversion fair lookup is not showing over here. Hey Dio, how are you, brother? How are you, man? Everyone is good. Everyone is good. How was the weekend, man? What did you do at this weekend? I mean, Saturday and Sunday. Let me know that. Okay. So you can see market actually came to this weekly fair value gap. Nobody closed above the constant encroachment. Yeah, little weak go above that fair value gap. I don't care about the week. I care about the body because body is going to tell you the story. So yeah, this fair value gap is perfectly holding the price. It went lower. Where did it came? To that inversion fair value gap. This candle low, that candle high. Where the body closed inside this inversion fair value gap. But I really want to say market will break this inversion fair value gap and it will reach until that lower fair value gap from the weekly chart. Okay. So from monthly chart, I told that I would love to see market will go toward that low or that rejection block. I that is my expectation from monthly chart. But from weekly chart, I would love to see market will reach until that last fair value gap from weekly chart. Okay, I would love to see that. Now, if market start to reverse from here and the body close from above that inversion fair value gap, I will change whole concept toward that fair value gap. I'll change that. Okay, I will start to think. Okay, now market is actually going higher and it will go through this fair value gap. Now, this is kind of situation where I mean nobody can tell you directly market is going here, market is going there. You have to expect and you have to depend on the price action. Now how do you know which one is going to work? How do you know which way market is going? In that type of situation you have to depend on the fair value gap. So look at this run here. Okay, this is the run. Where is your last fair value gap? This is your last fair value gap. Market came to that last fair value gap, it's just coming lower. Now, where is your last fair value gap from that run? Look at this run. Is there any last fair value gap? I have this last fair value gap. If you have already watched my breakaway gap video, you know most, I mean, 90% of the time, price actually left that breakaway gap open. Okay, it never reached that breakaway gap. It never reached. Now it is kind of situation where you have to understand which way market is going to work. Don't think this is the weekly chart, just think this is the 1 minute chart, like that way. Okay, just if you think this is the 1 minute chart, you can see market has taken the liquidity, market structure shift, price came to this fair value gap. This is the fair value gap entry fair, I mean the last fair value gap or the breakaway gap. Market went higher, now it is coming lower toward that order block. See this last down close candle, that is my order block. And if you look for the consecutive order block, then that was the level for the consecutive order block. When the consecutive order block level is broken, then my interest is to that specific order block. At the same time, we have this very nice parallel gap around that area. So I would love to see if market can reach until that parallel gap. That is my expectation. At the same time, this inversion parallel gap, okay, this two black bold line, this is the inversion parallel gap. Why inversion parallel gap? Because this low failed to take that low. See, it failed to take that low. That is why this parallel gap is working as the inversion parallel gap. So I really care about this inversion parallel gap, but I want to see market will break that inversion parallel gap and it will reach to that last parallel gap at least. Okay, then we will decide is market going to take that low or not. But yeah, to be honest, that is my expectation. At the same time, don't forget this inversion parallel gap is very strong to hold the price and send it back to that buy side liquidity, that high and that high, they are relatively equal high, so that is my buy side liquidity. If you look for the sell side liquidity, do you see any sell side liquidity here? I don't see any sell side liquidity, so I don't have any sell side liquidity, but I have very clean buy side liquidity here. So I really want to see market will go higher. At the same time, I would love to see market will reach until that last fair value gap. Now market is going to that fair value gap or market is going to that buy side liquidity, it will decide. I mean this inversion fair value gap will decide that. Okay, which way market is going. So you, if you just mark that inversion, try to understand, brother. If you understand the inversion fair value gap, last fair value gap, or this fair value gap, if you understand, you will expect the reaction from every level. Okay, so you have to expect the what to say, I mean reaction or the reversion. You have to understand that. You just can't say market is going lower. You just can't say market is going higher. If anybody tell you like that way, okay, now market is going higher, he's lying because nobody knows where market is going. Everyone actually expect something, they expect from the market. This is why this game is called the probability game. Okay, the most probable things. What is the most probable things? Now, if you ask me what is the most probable thing, it should go higher. It should, this inversion fair value gap should hold the price, and it should go higher toward that buy side liquidity. That is the most probable thing according to me. But at the same time, if you ask me, if I was the market maker, what I would do, I would send the price until that last fair value gap. At least it will tap to that fair value gap, then it will go toward that buy side liquidity. That would I would do, okay, if I was the market maker. So that is the thing you have to expect, and then you have to decide. Now, if you ask me, how do I know that market is going lower or higher? How do we trade then? As I told, we have the news from Tuesday. So Monday is the accumulation day. Monday will decide where market is going actually. Is it going lower or is it going higher? Monday it will decide which way market is going. So that is why I told, if you just wait the Monday, I believe that in Tuesday you will get better price action. Hey George, how are you, brother? Do you still watching movies with kids, brother? Okay, man. Thanks, good. That's good, man. Hope all is well, brother. Everything is well. Loto Loto, how are you, brother? This is from weekly chart. I'm just going to break every time frame. Okay, so from monthly chart, as I told, I would love to see market will come here, that rejection block or that low. Okay, so let me go over there one more time. So this is the monthly chart. You can see this inversion fair value gap. This monthly inversion fair value gap is holding the price, sending the price lower. So when market is falling, it should reach until that rejection block or that low, at least that low. It should reach over there from monthly chart. Now, if you go to weekly chart, you will get more level over here. So from weekly chart, you will see market came here, then it started to fall. That means this fair value gap is holding the price. When it is holding the price, it is going lower. We have two level. First level is this last fair value gap. Second level is this inversion fair value gap. Now, if market would love to go lower, then this inversion fair value gap will fail to hold the price. We will get that information in Monday, as I explained. Okay, if this guy hold the price and market started to go higher from Monday, I mean, if in Monday market failed to break that inversion fair value gap, then Tuesday we will expect market will go higher. At the same time, if you look for the liquidity from weekly chart, there is no sell side liquidity over here. There is only the buy side liquidity. Now you can say, brother, we have this swing low. Why that is not liquidity? I actually go for the relatively equal highs and relatively equal lows. Nothing is liquidity for me. Okay, nothing. But yeah, imbalance is very important. The last fair value gap over here, that is very important. When I saw this last fair value gap and market is very near to that last fair value gap, that is why I'm expecting this inversion fair value gap will fail and a fake breakout will happen. That means one candle will go low, then the very next candle will go higher and go in above or inside this inversion fair value gap at the same time, something like this. It will come here, then it will close there, something like that. So this will be the fake breakout. Now we will see how Monday will work and Sunday open. Okay, it's very important. If you see a very big uh, opening gap in Sunday, then this analysis can be, I mean, totally ruined. It can be totally ruined by Sunday open only, because Sunday open is very important. Let's go to daily chart and let's see if we can get something or not. So this is the daily chart. Now, in daily chart, you can see this low and that low. They are relatively equal lows. So this is the sell side liquidity. Okay, this is now sell side liquidity. Until the weekly chart, we had no sell side liquidity. But when I am in daily chart, we have this very clean sell side liquidity. This low and that low. Now, if you look over here, we don't have any buy side liquidity. Look, just we don't have any buy side liquidity. We have this extreme buy side liquidity, but depending on the daily chart, we don't have any buy side liquidity near the price. There is no buy side liquidity. We have this sell side liquidity. Now, if you think about that monthly chart, remember what I told? Market will come to that rejection block, this monthly fair value gap high, that was the rejection block level, or that low. Now, if you just compare the monthly chart with the daily chart, you will get a correlation. Okay, yeah, market, now you will understand, market can reach until that low. Why? Because we have this sell side liquidity. I would love to see that. Why I'm changing my word again and again, why I'm telling you that market is going higher sometimes and why market is going lower sometimes. Because if market would love to go higher, it just go boom. No, not like that way. It can easily go little lower, then higher retracement, maybe it will spend some more time here, something like this, consolidation, then it can go higher. Or market can easily come here, make a week, just something like a week, just it will use week and take that sales and liquidity, then it can expand higher. Now you can say, brother, it is not possible because it's a very huge range. We have the CPI. Okay, CPI is very dangerous. It can easily weak below that sell side liquidity, then body can close, come back here, and it can close over there. It can happen by using the CPI news. So be careful about the CPI. CPI is very dangerous. Never try to trade CPI. Never ever. Please, that's a request. Okay, because your stop loss is not going to work sometimes when you will try to trade the CPI. Uh, that is a long discussion, but whatever. Now look at the daily chart. What happened over here? Now we have this daily fair value gap. Look at this daily fair value gap. Price came to that daily fair value gap. Remember, here is our monthly inversion fair value gap, weekly fair value gap, and now we have the daily fair value gap. I just removed all that level from here. I mean the weekly levels and the daily monthly levels. From here I just kept the daily levels. So if you want, you can use both, all of those level in your chart if you want. Okay, but I just remembered that we have monthly inversion fair value gap here, weekly fair value gap here. Now we have the daily fair value gap. Price came here to that daily fair value gap, cleared all of this liquidity, buy side liquidity. See this high and that high, they're relatively equal highs. Market has taken that relatively equal highs, went lower. This is the breaker. Market trade that breaker. If you don't like the breaker, maybe you will look for the 22 YT model. Okay, market has taken the buy side liquidity, market structure shift, maybe there is some fair value gap or something. I don't know, I see only breaker, so I marked it as my breaker. After taking that breaker, it went lower. Now here is my 22 RT model. When market went lower, this is the market structure shift. This is the entry fair value gap. This is the last fair value gap. At the same time, here is another 22 YT model. Market has taken some liquidity. This is the market structure shift, fair value gap. Market came to this fair value gap, went higher. The lowest body close candle is the order block. Market came here to that order block. At the same time, that volume balance came here. Now it should give me a reaction. If market would love to go lower to take that sell side liquidity, it has to give me some reaction. Why it should give me some reaction? Because whenever market would love to go lower, first it has to make some fake move so that retail trader can think, okay, now market is actually going higher, it's not going lower. So when it started to go higher, that is, I will say that is the reaction from that order block level or that volume balance. So it come here, either it can reach until that entry fair value gap or the last fair value gap. If this last fair value gap is broken, then I will totally change whole of my concept toward that sell side liquidity. I will start to think, no, market is not going lower, not anymore. Now it is going higher. If this last fair value gap is broken, the body can close above that last fair value gap, then I will start to think market is actually coming here toward that buy side liquidity. It's not falling toward that sell side liquidity. So are you guys getting my point? It's little confusing, but if you try to understand, you will get the point. Okay, every time frame is different. Now higher time frame is more strong compare, I mean it's more stronger comparing with the lower time frame. So from monthly chart, what did you see? Price came to that monthly inversion fair value gap. Now it's going toward that rejection block or that low. In weekly chart, you have this fair value gap. This is the weekly last fair value gap. Remember, this is that weekly last fair value gap. Right now price is inside the inversion fair value gap. So if that inversion fair value gap can hold the price, then market should go higher and take that buy side liquidity. What I told you, I don't want to see that. Why? Because I would love to see market should reach at least until that I mean last fair value gap from the weekly chart. Now when I come here to the daily chart, you can see market fall, came to this order block. Why this is order block? Market has taken the sell side liquidity, market structure shift, fair value gap. Price trade that fair value gap, went higher. The lowest body close candle is the order block. Market came back again to that order block. At the same time, it has taken all the liquidity. It has traded that order block. Also this volume balance. Okay, this is not important. This volume balance is not important. But as I have seen, there is the volume balance. I just marked it. Okay, but this is not important. Here, the order block is important. So price came to that order block. At the same time, it has made two fair value gap here and another setup here. Market has taken the buy side liquidity. Market structure shift. First fair value gap, last fair value gap. Let's see if market would love to go lower. The body should not close above the consequent encroachment of that last fair value gap. Body can't close above that. So if I see market actually come here, either this entry fair value gap or the last fair value gap, then I will start to look for sell, not buy. Remember, not buy here. Now, right now, I'm thinking market will go higher for a short period of time. Market will go higher. How far it can go? Either this inversion, entry fair value gap, or that last fair value gap. These two level, market can go higher. After reaching over there, I will start to look for sell toward that sell side liquidity. When market will go toward that sell side liquidity, I will keep in my mind this is the weekly last fair value gap. If it is broken from the daily chart, I'll be more sure. Not from the daily chart, sorry, from the hourly chart. If this weekly fair value gap is broken from the hourly chart, I will be 99% sure that market is going toward that sell side liquidity and it's going to take that sell side liquidity. At the same time, I will keep in mind there is the monthly rejection block. So I will keep that all in my mind. Okay. So this is how you will break the market. You have to understand the higher time frame. You have to understand the lower time frame. What is my expectation from daily chart? Market will something like this. Either it will come here to that inversion fair value gap, then it will fall and take that sell side liquidity, or it will reach until that last fair value gap, then it will start to fall. If I see this last fair value gap is broken, then I will start to think, okay, market is not going lower, it is actually going higher. Okay, so is it clear or not? If you are confused, just let me know, because I'm gonna change the dollar index and I'm going to go to that Nasdaq. So please let me know if you are still confused, because there's a lot of information. If you want, I can go from monthly, weekly, and daily chart one more time, because in hourly chart I don't think it's important. I can just wait until the daily chart until today. Okay. So please let me know if you are still confused. Then I will go one more time. Otherwise, I will just change the time frame. Please let me know. Okay. I know I talk too much and lot of information, but yeah, to be honest, man, it's kind of this type of things. If you want to break down the time frame, you have to think all the time frame all together. Okay. So I'm just thinking monthly chart, weekly chart, and daily chart all together. If I just go to hourly chart, trust me, you will be fully confused and you will start to think, what is this shit? So till now, I believe that if you stay in daily chart, that's good enough. Okay, you don't need to go to hourly chart. 62. Okay, so okay, one more time. This is the monthly chart. What do you see from the monthly chart? Market came here, started to consolidate, right? This is the consolidation from monthly chart. Now market went higher, it went lower. This is the inversion fair value gap. Okay, this is inversion fair value gap. Why this is inversion fair value gap? This swing high failed to take that high. So this swing, this fair value gap is the monthly inversion fair value gap. Price came here to that monthly inversion fair value gap, failed to go above that consequent encroachment of the monthly inversion fair value gap. As I'm just marking this inversion fair value gap for last how many weeks? 1, 2, 3, 4, 4, 4, 4, 1, 2, 3, 3 months. I'm just marking this monthly inversion fair value gap that is important for last 3 months. So finally, last month market went here, started to fall. So this is the reaction. Now, when it is falling, it should reverse from a logical level. What is the logical level? Is there anything that can hold the price, send it back? Do you see any fair value gap here? No, you don't see. I can't see nothing over here. That's why I told market should reach at least to the rejection block, the lowest body close. Okay, So remember, this monthly fair value gap high and the rejection block, both of them are at the same level. So market should reach until that level at least. If it is overzealous, then it can take that low. That is for so long. Okay, we don't need that. First, you can think it will reach until that lowest body close candle. That should be your thinking. Market doesn't need to go over there. If you get a run toward that, that's enough for you to be profitable. Okay, it doesn't need to reach over there, but you have to think like that way. Why? This inversion fair value gap is now holding the price. So that is all from monthly chart. There is nothing. I guess this is very clear to all of you. Okay, this is very clear. Now let's go to weekly chart. Now from weekly chart, it came to that weekly fair value gap, started to fall. Now in monthly chart, we had nothing here. We had nothing at all here, except the rejection block and that low. We had nothing. Remember, nothing at all. Now in weekly chart, what do you see? This is the inversion fair value gap. This is weekly inversion fair value gap. The way I marked the monthly inversion fair value gap, this is the same way I marked that weekly inversion fair value gap. Now here, when first time market came to that weekly inversion fair value gap, went higher, take that buy side liquidity. I believe that weekly fair value gap, weekly inversion fair value gap has done its job. Okay, this candle close above that fair value gap. Very next candle come back again inside that inversion fair value gap, went higher, take that relatively equal highs, that high and that high, they're relatively equal highs, take that high. So it has done its job. This weekly fair value inversion fair value gap has done its job. Still, for over confirmation, I kept it on my chart. I want to see market should break that inversion fair value gap and reach until that weekly fair value gap. This is the last fair value gap from weekly chart. Now when I was in monthly, guys, can you hear me? There was an issue with my internet. Can you hear me? If you can hear me, please let me know. Can you hear me? Please let me know, man. That was in okay, yeah, no, okay, okay, thank you, Stephen, thank you, man. I'm sorry, there was a, man, internet problem. Okay, sorry. So what I was talking here, in monthly chart we had no level here except the rejection block and that low. But now when I'm in weekly chart, I have this weekly last fair value gap. Okay, remember the last fair value gap is always very important, very important. This inversion fair value gap, I believe that it has done its job over here. When it has made that inversion fair value gap, price go above that inversion fair value gap, price come back again here one time, two time, went higher, take that liquidity, it has done its job. For over confirmation, I kept it in my chart, but to be honest, I would love to see it will break that inversion fair value gap and it will reach to that last fair value gap at least. Okay, now above the rejection block and that low, I have another level where I would love to see market can pause. Okay, this fair value gap has the power to stop the price, send it back toward that buy side liquidity. At the same time, if you see the weekly chart, we have the clear buy side liquidity. We don't have any sell side liquidity, nothing. We don't have anything over here, no sell side liquidity. So we have this buy side liquidity, but lower here we have this imbalance, which is very important. Okay, so it can reach toward that imbalance. This is from only weekly chart. Forget about the monthly chart. I cleared the monthly chart. What is the expectation from monthly chart? Now from weekly chart, I would love to see market will reach until that fair value gap. When if just think market reach over here to that last fair value gap, then it started to go higher. Okay, that can be the the reaction. That means market is not actually going higher, it is going little higher. At the same time, maybe there will be some fair value gap or something, it will go toward that, then it will fall again, something like that. Because from monthly chart we saw there is the only level, that rejection block or that low. These two level we have from monthly chart, that is much more stronger than the weekly chart. So when it will come here to that weekly last fair value gap, I will expect some reaction. I just don't think it will just break that fair value gap directly, something like this. It is just going to break that, something like that. It's not going to happen. There has to be some reaction. Has to be. There has to be some reaction. So right now I'm thinking market can reach until that weekly last fair value gap. Then maybe there will be some reaction next week. The very next week I will decide, I will analyze it again, and then maybe I will go for that low. Okay. How are you, bro? Remember me? Rishabh Baluni. Oh man. I forgot, man. I forgot. I'm sorry, man. Uh I really forgot, man. Oh man. What a question. So is it clear? The monthly chart and the weekly chart. Is it clear? Let me know. Then I will go to daily chart, because let's break one by one. Okay, so just let me know that it is clear or not. The monthly chart and the weekly chart. Is it clear? 100% clear. If you have any confusion, tell me, I will explain again. Okay, no problem with that. But let me know, is it 100% clear or not? Just let me know, please. It's very important. Brabas, yes, let's go. Okay, who created last fair value gap? Prabhas, before me, nobody talked about last fair value gap. Nobody. Simply nobody talked about last fair value gap. Now, I'm not telling that I'm the creator of last fair value gap. Yeah, I talked about last fair value gap. I mean, even ICT didn't talk about the last fair value gap. But yeah, I learned it from ICT. So, ICT told that he just make the core content so that people can make their own model. Okay. So whatever I'm getting here, I got it from ICT. So I'm not the creator of the last fair value gap, but I can tell you, nobody talked about the last fair value gap, how to use the last fair value gap, how beautifully you will get the precision from the last fair value gap. Nobody talked about that before me. But I'm not the creator. Okay. I am just explaining that, and I learned it from ICT. Even maybe ICT doesn't know about that. So that's all, man. Don't forget to like. Yeah, thank you, man. Last Parablica is pretty kick-ass. It's really awesome. Thank you. You use a personal account or funded account? Funded account, man, not personal. But guys, please let me know that is it. I mean, understand. I mean, do you get it or not? Okay, because I have to finish this very fast. The analysis thing, I have to finish it. Okay, so monthly fair value gap, sorry, monthly chart and weekly chart, is it clear to all of you? Please write it down, man. Please do it. Titu, well understood. Thank you, Stephen. I just got one confirmation. Please write down two or three more people, then I will go to daily chart. Okay, please do it, man. Otherwise I have to start from again, I mean from the beginning. Please let me know that. Clear. Okay, thanks, Lenny. Okay, Leonardo, thank you, George. Okay, so monthly chart and the weekly chart is cleared. Guys, whatever I'm just explaining here, it is going to happen? No. That is just my expectation. Okay, you have to understand that. That is just my expectation. I am just telling you one way. If this fair value gap can hold the price, this inversion fair value gap, and market started to go higher, in that type of situation, this whole analysis will fail. If Sunday will make a bigger gap, this analysis will be failed. Okay, everything will be failed. But I'm just explaining the thing the way I do every week. So I'm just going to do that. Okay, please do your own analysis, go with your own thinking. Okay, I'm just trying to express my thinking so that you can get a guideline. That's all, brother. Okay, thank you, AFX. What do you expect to price fall? Nev, I have already told, man. Until now, here and here and here. These three level, that is my interested. Clear, Tito. Thank you, Ganesh. But video will be posted, so no one can rewatch after, no problem. Okay, yeah. I am not going to delete anything. Okay, so it will be there. Now I am in daily chart. So this is daily chart. Let me make it more bigger. It is okay. Yeah. So this is the daily chart now. I just removed the weekly levels except this weekly last fair value gap. I remove the weekly level and the monthly inversion fair value gap. Now from the daily chart, what do you see? Price came here. What did it do? Make that relatively equal lows. Until now there was no liquidity. Now we have very clean sales and liquidity. See, this low and that low, they are relatively equal lows. So I have this sales and liquidity, right? Do you see any buy side liquidity except that one? Now this is too far from the price here to here. That is too far. Which one is near? This sell side liquidity is near the price. I am thinking that market is going toward that sell side liquidity. Just forget about weekly chart, forget about monthly chart. Look at the daily chart now. Okay, what price has done? Market went lower. Take all of this liquidity, this low, that low, this, all of this liquidity here, lows, relatively equal lows here, that was relatively equal lows, lot of liquidity. Okay, just look over here, this low, that low, and that low. This three low is the relatively equal low. See, this is your clean sell side liquidity. What market has done? Market has taken all of this liquidity, went higher, gave me the market structure shape. This is the fair value gap. Price came here to that fair value gap, went higher. When price went higher, where is your order block? The last low, down close candle, which is actually the lowest body, the opening and the weak high, that is your order block level. So I just marked it over here as my order block. Now when I marked that order block, price went little higher. Take that relatively equal highs, that high, those highs, those highs, that has made relatively equal highs. Okay, let me remove it. So over here, let me show you. So this is that relatively equal highs or the buy side liquidity. Market has taken that buy side liquidity. Okay, trade the last fair value gap from daily chart. This swing has this last fair value gap. Trade that fair value gap, broke lower, got the market structure shift here. Okay, this is the market structure shift. Got two fair value gap, 1 2. Now there is the breaker block. I don't think so it's important to use that breaker block. I mean, it has done its job. Okay, so I don't need to explain that breaker block over here. I just can show you this market structure shift. This is the entry fair value gap, this is the last fair value gap. What is the rule? Market should go at least to that entry fair value gap, then it should go lower toward that sell side liquidity. Forget about weekly chart and the monthly chart, forget about everything. Just look at this daily chart. Market has taken all the buy side liquidity, but when market went higher, what it left? The sell side liquidity, right? When market went higher, it left that sell side liquidity. So it came here, went lower, gave me the setup. What should it do? It should reach to that entry gap. Now market just can reverse or can give you the reaction from a random level. For example, when market is falling, okay, just from here, from this level, it is falling, it is falling, it is falling, it just can give you the reaction from here, random level. It can give you the reaction here. So it has to reach a level. Where is your level? There is your volume imbalance. Look, this candle low and that candle high, there is a volume imbalance. It has to reach either that volume imbalance or that order block. All these two level is important. Okay, so market reach over there, then you can expect some reaction. Reaction means market can go higher first. Now if it started to go higher, what is the last level where market should go? Here is your entry gap or the last fair value gap. If market would love to fall, it should reach any of this level first. As I explained, market just can't reverse from a random level, it can't do it. So it has to reach any of this level. Sometimes when market is too heavy in that type of situation, you see market is not going to trade any of this level. Okay, that is very rare, but it can happen. Most of the time, 99% of the time, it has to reach in a certain level. So where is the certain level? Either this entry fair value gap or that last fair value gap. For example, it reached last fair value gap, then I will look for sell. I'm not looking for buy. Sell toward that sell side liquidity. If the last fair value gap is broken, for example, price came here, body closed there, price is working over there, in that type of situation, I'm going to remove this thing from my chart. Okay, I'm going to remove it from my chart because the last fair value gap is already broken. If this fair value gap, I mean, sorry, let me actually put it here. If market came here to that last fair value gap, I'm also going to remove this from my chart, because this entry fair value gap is important until price doesn't reach to that last fair value gap. Until then, that time, this entry fair value gap is important. I will give you the example. Don't worry. When I will be in Nasdaq, I'll show you the entry fair value gap importance. Okay. So if market come here to that entry fair value gap and broke lower, it is also possible. That is why this entry fair value gap is important. If price come here, I don't need this fair value gap, not anymore. It is useless then, totally useless. I don't need to see this balanced. I don't need to see anything from that fair value gap, not anymore. If market can reach to that last fair value gap, okay, do you get it or not? Okay, so right now I'm thinking that market will give me a reaction from that order block. Why it is important? Because you can see market falls so long, right? It has taken all of this liquidity. Now it should start to go higher. Then the retail trader, they will think, okay, market was going higher, higher, higher. This is the retracement. Now market is going higher again. They will try to take buy. When they will try to take buy, smart money will look for this thing. This is what is this? This is the support zone, right? This is the support zone. Smart money will go toward that support zone. Whoever took the buy here, they will be stopped out. Right now, my expectation is market will come here or here, then it will go toward that sell side liquidity. When it will start to fall toward that sell side liquidity, in that type of situation, this weekly last fair value gap is important. Okay, now here is the part of the weekly last fair value gap. You can see there is the daily last fair value gap as well, but as I have very clean weekly last fair value gap, I will go for that weekly last fair value gap. For example, price came here, just for example, came here, it's falling, it came here. Now when it will be here, maybe you get a setup here for the sell side liquidity. Are you going to take that sell? No, I'm not going to do that. Why? Because this is the last fair value gap from weekly chart. I would expect some reaction. That means maybe market will make some order block here, maybe some breaker block, maybe some fair value gap, anything. Market will reach over there, then it will come here, it will work sometimes, then, because this is the last fair value gap. Remember, the last fair value gap always give you a reaction. This will be the reaction. Is it clear, guys? Now is it clear? The daily fair value gap, is it clear or not? Okay, let me know. If it is clear, then I will go to Nasdaq. Okay, so I just explained what is my expectation right now. If this last fair value gap is broken, I will expect market will expand higher, at least up to that daily fair value gap. Then this buy side liquidity, that's I really don't want to see. I want to see market should go toward that sell side liquidity. I don't need to take that liquidity this week, but market should go toward that sell side liquidity. In the same time, I will I will I'm very careful about the last fair value gap from weekly chart. Right now, I'm thinking market will go higher first, then it will fall. Okay, or it will accumulate here sometimes, then using the CPI, market will go higher little until that last fair value gap maximum level is the last fair value gap, then it will fall again. Is clear, brother? Please let me know. Okay, if it is clear, then I will change my chart to Nasdaq. Stephen, clear today? Okay, thank you, Stephen. Just one or two more, guys. Okay, just write it down that if it is clear or not, please. That's a request, man. Okay, guys, please do this hard work, man. Just write it down that you can hear me or not. I mean, sorry, you understand the whole concept or not? The way I'm thinking right now, is it clear or not to you, all of you? Okay, please let me know that. At the same time, please don't forget to give me the like. If anybody is new, you can subscribe to my channel if you want. But if you don't want, it's okay. Just don't forget to give me a like. Before leaving, leave me a like. And I thought that I'll just close my session within 1 hour, but I'm thinking it will take maybe 1 hour, 5 to 10 minutes. Please let me know. I mean, if it is clear or not. Just it's very simple thing, right? Just write it down, clear or it's not clear yet. I will explain one daily chart one more time then. It's really important, okay, to know that you are getting this or not, because if I keep talking and if you don't get the point, everything is just wasting time. I will think that I'm just wasting my time and I'm wasting your time as well. Lenny Koski, clear. Okay, so two guys write it down clear. I'm leaving that rest of all also clear. Okay, so I'm just gonna change my uh time. I mean chart to Nasdaq. Elena Costa. Okay, thank you, Elena Costa. So three guys write it down clear. Thank you, man. This is the weekly chart for Nasdaq, and you can see market is at the all-time high. Okay, so thank you, George. Thank you, man. So market is at the all-time high now, right? What is this level? This buy side liquidity level. What is this level? If you go to your monthly chart, I'm going to see this is the whole price action, and I'm gonna use the lowest body and the highest body over here. Okay, so if I use the standard deviation, you can see this is the minus 1.5. Okay, if you see minus 0.5, minus 1, minus 1.5, minus 2, minus 2.5, minus 1.5 is one of my favorite level. Okay, I saw that 99% of the time, not 99, 95% of the time, market reach at least until that minus 1.5 standard deviation. If you don't have any level here, okay, no fair value gap, nothing, even if there is some level, most of the time if you use the standard deviation, market love to reach at least minus 1.5 standard deviation. Now when the minus 1 standard deviation is broken, how do I know it's broken? This body closed above the minus 1 standard deviation. The very next candle come back again minus 1 standard deviation, make it as a support. Right? See, it broke the minus 1, make it support the minus 1. It should expand toward that minus 1.5 at least. If it can break the minus 1.5, then I will look for minus 2.5. Minus 2.5. That doesn't mean market can reverse from that minus 2. That doesn't mean market can reverse from minus 1. As I told, 95% of the time I saw if market would love to reverse, it reversed from minus 1.5. If you ask me then what happened, then rest 4% of the time market reversed from minus 2.5. So left 1% of the time market actually react from minus 1, minus 0.5, minus 2, minus 3, something like that. Okay. So these two level is very important for me. That's why I marked that buy side liquidity level. Don't think that I'm just making something new. I'm going to predict the all-time high. No man, I'm not doing that. Okay, don't misunderstood me. I'm very afraid of that. I'm not making anything. I'm not renaming anything. Guys, I saw that some people actually learn from ICT and then they start to make new name, okay, new name, and they just tell this is my concept, that is my concept, whatever they tell. I'm really afraid of that. I don't want to do that because I never created anything. Whatever I got from ICT. Whatever, not any other person in this world, no one. I didn't get anything from anyone except ICT. So whatever I'm telling you here, that's all information I got from ICT. Maybe sometimes ICT didn't talk about the last fair value gap, but I found that fair value gap is working because I watched ICT's video. That's why I talk about the last fair value gap. Now I just can't tell you, brother, this is my concept. No, this is not my concept. What is fair value gap? I knew it from ICT. Nobody taught me that except ICT. So this is not my concept. This is ICT's concept. I found this thing that is working or that is maybe useful. Nobody talked about that. I talked about that. That doesn't mean this is my concept. So same way, this buy side liquidity or minus 1.5 standard deviation. I'm not I'm not telling you that this is my thinking. This is how I am predicting the all-time high. No, I have just used the fib retracement. I learned it from ICT. I'm gonna mark it for my understanding, better understanding. Okay. So please don't misunderstood me. Please, that's my request. So from monthly chart, you can see that minus 1.5 standard deviation until price reach over there, I'm bullish. Okay, so from here, I don't have any other fair value gap except this one. This is the only monthly fair value gap. I don't think so. I guess there is a small fair value gap here. Here. Okay. So there is a small fair value gap actually from monthly chart. Now it can reach until that fair value gap, that is normal, but yeah, I want to see market will reach to that buy side liquidity first before falling. Okay, that's my expectation right now. From weekly chart, I'm gonna remove this fair value gap because from weekly chart I have that order block level. Okay, so that fair value gap and that order block level are at the same way. I mean same position. So I'm just going to use that order block level to my chart. Right now price is over here. I would love to see market will go higher. It will take that buy side liquidity or it will reach that buy side liquidity first. Then if it wants to fall, it can fall. Nothing wrong with that. But that doesn't mean market can't go lower. Obviously it can fall from here. There is nothing wrong with that. If you ask me, I would love to see market will go expand higher, at least minus 1.5. If it can break the minus 1.5, then I will look for the minus 2.5. This two level is important for me. So I'm bullish for Nasdaq from weekly chart. So from weekly chart, I would love to see market will expand higher. Let's go to daily chart. Now here is the daily chart, and you can see market has taken some liquidity, market structure shift. This is the fair value gap or the entry fair value gap. So this is the entry fair value gap, this is the last fair value gap. See, this is the last fair value gap, this is that weekly order block level, this is the entry fair value gap. As I explained in dollar index, remember, price can easily go to that entry fair value gap, then it can fall. If it go to that last fair value gap, I'm gonna clear the entry fair value gap from my chart. Here, this is that entry fair value gap, this is the last fair value gap. I kept it on my chart. I just removed the entry fair value gap because it has done its job. Price came here, went higher. The lowest down close candle is the order block. Price came here to that order block. At the same time, I marked the volume balance as I marked the volume balance in dollar index. But I don't need that volume balance. This order block level is enough for me. Okay, this is the order block. Price came here to that order block, went higher. This fair value gap should be kept open. Okay, it should, sometimes you will see when I'm trading, I mark it like this way, here something like this. Want to see unfilled, this is that unfilled fair value gap. I want to see it will be unfilled. Okay, that's my expectation. Now that doesn't mean it can't be filled, it can be filled. Okay, but I want to see it will be unfilled. Maybe a little portion that will be unfilled, it's okay, but it has to unfilled, it has to be unfilled. This is the buy side liquidity as we are at the all-time high. We don't have any other price action except the standard deviation. So from daily chart, I am thinking that maybe market is going higher toward that buy side liquidity here, over here. At the same time, if market would love to go lower, how far it can reach? I will explain that from hourly chart. So here is my hourly chart. Okay, so this is my hourly chart. You can see market has taken all the buy side liquidity, right? This is relatively equal highs. This high has made that relatively equal highs more stronger. Last day, that means Friday, price has taken that high. It's falling, right? It's just falling. Now look, this low and that low. What is that? Anybody can tell me. What is that? That is clean sell side liquidity. I have this clean sell side liquidity. Remember in dollar index, I had some clean sell side liquidity. Over here, I have the same sell side liquidity. Remember in dollar index, I told market can reach until that entry fair value gap or the last fair value gap before falling. So this run, look at this run. When if market give me this run for dollar index at the same time, it will take that sell side liquidity. Maybe it will reach until that hourly last fair value gap. This is the last fair value gap from hourly chart. So it can reach until that hourly last fair value gap. When you will expect this run? When, if dollar index is going higher. Actually, let me open the dollar index chart so that I can show you both of the chart same time. It's very important to understand. Okay, so over here, this is the daily chart for dollar index. My expectation is this is the dollar index. Okay, market will reach until this entry fair value gap or the last fair value gap. This is the higher run. Okay, same time Nasdaq will take that relatively equal loss. See this relatively equal loss. So market is going to fall and take that sell side liquidity. It can reach until that hourly last fair value gap. This is the point. It can reach until that hourly last fair value gap. But if market just reverse from there, there is nothing wrong. Why? Because from daily chart, this is the fair value gap that should be open, that should keep open. So it can easily trade to that fair value gap. What is that fair value gap? See this candle high, that candle low. What is that fair value gap? Entry fair value gap from hourly chart. This is the last fair value gap from hourly chart. This is the entry fair value gap from hourly chart. It can reach until that entry fair value gap, then it can expand higher toward that buy side liquidity. At the same time, dollar index will trade over here, either this entry fair value gap or the low fair value gap, then it will go toward that sell side liquidity. So this is up and down, here down and up. Is it clear, guys? I i believe that it's clear. It's little confusing, but I'm trying my level best so that you can understand the fact. Okay, I'm trying my level best, to be honest, brother. I'm trying my level best. I don't know how can I make it more more clear or more easier to explain. So I'm going to go daily chart one more time. So here is the daily chart. What do you see? Market came here to that daily last fair value gap. This run, this is the run. This is the last fair value gap from daily chart. Last fair value gap from daily chart. Try to understand, man. No, this all the entry fair value gap. I even didn't mark over there the entry fair value gap, if you remember or not. I just marked that fair value gap and I told that market should reach over here because I was expecting market will come here to that weekly fair value gap. That's why I marked the last fair value gap from daily chart. Even if market failed to come here, it should reach to that last fair value gap. It come to that last fair value gap, went higher. At the same time, it takes some liquidity, give me market structure shift, first fair value gap or the entry fair value gap. This is the last fair value gap. Price come to that first fair value gap, went higher, come back again. Where did it came? Order block. This is the place where you will look for order block. Price came to that order block, expand higher. When it expand higher, the first fair value gap should be unfilled. Okay, it should be unfilled from daily chart. Try to understand, man. From daily chart, it should be unfilled. Unfilled means not even body, not even weak, should close that fair value gap. That means a little portion of that fair value gap has to be open. Until now, it kept open 50% of that fair value gap. It's cool. It can easily expand higher now. It doesn't need to go lower toward that standard deviation. If it would love to go lower, it should left a little portion open of that daily fair value gap. Now I'm coming to hourly chart. What do you see from hourly chart? So from daily chart, our expectation is market should left some portion open from that daily fair value gap. But below that daily fair value gap, what do you have? Hourly last fair value gap. Above that hourly last fair value gap, you have the hourly entry gap. Why it is that? Market has taken the liquidity, market structure shift. This is the first fair value gap, the breakaway gap. This is the entry fair value gap. Try to understand, guys. This is the entry fair value gap. Okay, I didn't mark that entry fair value gap because the daily fair value gap and the entry fair value gap are at the same level. So I just kept it in mind. This fair value gap from daily chart, it should be unfilled. There should be some portion that should left open. So if it would love to go lower toward that sell side liquidity, what do you see over here? Do you see any buy side liquidity? I don't see. No, brother, there is a buy side liquidity. You told us that if you ever see the shallow run, that is the obvious liquidity. Now, the shallow run things happened over here. That high has taken by that high. That was the shallow run. So that was the obvious liquidity. Now, when this is taken by that high, I don't see this as my liquidity, not anymore. This is not even not my buy side liquidity. If market would love to go higher, it should go much more higher, but it just can't go for that buy side liquidity. It's nearly impossible. Okay, now nearly impossible means it doesn't going to happen. I'm not telling that. I never saw that happen. Okay, so I mean that is my experience. Maybe your experience is different. I never saw that happen. So this is not even my buy side liquidity, not anymore. I will look for that minus 1.5 standard deviation. I'm going to repeat the same thing again and again so that you can understand, guys. Okay. So from 1 hour chart, what do you see? Market has taken. Where is your liquidity first? Where is your liquidity? I have only the sell side liquidity. I don't have anything else, nothing else in my chart except this sell side liquidity. Market has taken all the liquidity from here. Every liquidity has taken by that run. Went lower, got the market structure shift. This is the first fair value gap or the entry gap. Okay, this candle low, that candle high. This is the, okay, let me mark it. This is the entry fair value gap. Okay, here. Where is your last fair value gap? There is your last fair value gap or the breakaway gap. Okay, that means if market would love to go lower, it can't, the body can't close above the consequent encroachment of the breakaway gap. It can't close above that. Okay, so it can reach until here, it can reach no problem, but body has to close at the level of the breakaway gap or below the breakaway gap. Now every single time it's not going to happen, nothing is going to happen 100% of the time, but if you ask me, 99% of the time you will see body close at the breakaway gap, sorry, consequent encroachment of the breakaway gap. Then it will fall toward that sell side liquidity, or maybe this entry fair value gap has the power to send it back to, for that sell side liquidity. Nothing wrong with that. Nothing is wrong with that. Okay. So from hourly chart, I am expecting that market is going toward that sell side liquidity. Same time, at the same time, market has taken this sell side liquidity. Market structure shift. This is the this is the entry fair value gap. There is the last fair value gap from hourly chart. You can see price come to this entry fair value gap. So there should be some reaction. We got that reaction already. See this reaction. Now why it is important over here? Okay, as I explained, market came to that order block. I'm expecting some reaction here. Market come to this fair value gap. Look at this fair value gap. Market come here, then it went higher. That is the reaction. Same reaction I'm expecting here. Market came here to that order block level, a little reaction. Either it will reach until that entry fair value gap or the lower fair value gap. Here it came to the entry fair value gap, but it is not wrong if it reach to that end. I mean last fair value gap, it is not wrong at all. Okay, it can easily reach over there before falling. But if you ask me, I really don't want to see that it will reach until that fair value. I don't want to see that. I think the reaction has done already, but if it reach over there, I'm happy with that. And Monday is really nice to trade because that will be very low volatility. Okay, so over here it is going toward that sell side liquidity. I believe that where if it can reach for that sell side liquidity, then I will look for either this entry gap or this hourly fair value gap. I'll be very careful about that. I'll be very careful around that area. Right now I have the direction. When market will reach over here, I won't have any reaction, I mean direction. I won't have any direction. I have to wait for further price action. If you ask me what is that thing in that type of situation, for example, market actually came here until that hourly fair value gap or maybe until this entry fair value gap, then I will wait if market can go above that fair value gap's consequent encroachment. If it can close above that consequent encroachment, then I will start to look for buy again, because from my high time frame I know that I'm going toward that buy side. That's why most of the time you will see my direction is always correct. Okay, most of the time, 99% of the time you will see that my direction is correct until one thing is filled. Trust me, brother. I'm very confident with my direction. This is how I mark my direction. This is how I trade, man. And I want all of you to learn this thing, okay, so that you will be confident as well. Now I'm going to 15-minute chart. So here is my 15-minute chart. Okay, I'm going to remove this thing, this hourly entry gap from my chart. I don't need that anymore. I'm going to remove this hourly last fair value gap from my chart. I don't need that anymore. Okay, and I guess there is two. So now I'm in 15-minute chart. So from 15-minute chart, you can see this is the last fair value gap from 15-minute chart here. That was the last fair value gap from 15-minute chart. Price came here one time, two time. At the same time, it has made this relatively equal lows. From the last fair value gap, price went higher. Come back again. Where did it came back? Entry fair value gap. Market has taken some liquidity. Market structure shift. This is the entry fair value gap. Below this entry fair value gap, there is the last fair value gap from 15-minute chart again to that run. Where did it came? Entry fair value gap. Boom. Went higher. Where did it come? Over here. Why it come here? It has made that relatively equal highs. There is the 1 minute last fair value gap. I explained. I mean, 1 or 2 weeks ago, maybe I explained that it came to that 1 minute last fair value gap. It went lower. It came here. What do we have here? Hourly last fair value gap. Remember to my video, I explained this is the hourly fair value gap. Why hourly fair value gap? Because the 15-minute chart was messy. Above these two fair value gap, look at the price action. This is very messy. Okay. So because of this messy price action, I went to hourly fair value gap. Price came to that hourly fair value gap. Just trade here, went higher. This new day opening gap, hold the price, take the all-time high. It fall from there. I showed you this is the one minus 1.5 standard deviation. If you just mark that standard deviation, this is the minus 1.5 standard deviation, but I wasn't confident to get that standard deviation as a reversal. Okay, but we don't have any other price action over here, so we had no way to understand when market is going to fall. I was bullish, so I didn't anticipate anything over here. When market came here, I explained the entry setup over there to my video, last video. Now I'm going to explain what happened over here. This is the first fair value gap or the entry fair value gap. This is the last fair value gap from 15 minutes chart. Market has taken the liquidity, market structure shift. First fair value gap, entry fair value gap. Price came here. What did it came? To that entry fair value gap. This is the reaction. It went little higher. Now it is inside that entry fair value gap. Now I want to see that market will fall toward that sell side liquidity. I want to see that. But at the same time, remember, market has made another setup here. Market has taken the buy side liquidity, market structure shift, entry fair value gap, last fair value gap. If you say that market is going higher, okay, it's going higher above that high. What do you think? Market is going for that buy side liquidity? No, never. Because market is going higher, it is going toward either of this level. If you say this high is not broken, okay, it's not broken. Market is chopping here, around here, chopping here. You keep you will keep waiting until the last fair value gap is broken. This is the last fair value gap. From here, you just mark your setup, frame your setup from here. You can't do it. Why? Because this last fair value gap has the power to stop the price, send it back either for that fair value gap or for that high or for that buy side liquidity. This 15-minute last fair value gap has that power. So you can't frame your trade until this last fair value gap is broken. If it is broken, then this sell side liquidity is obvious. This is the sell side liquidity that should be obvious. Okay. Now you don't need to hold your trade until that sell side liquidity. That is last fair value gap from 15-minute chart as well. You can hold your trade until that last fair value gap. Something like this. So here to here, it will be near about 100 handle. If you get 30 handle, 20 handle, I believe that is more than enough. That is more than enough. You don't need that 105 handle. Okay, so below here to that sell side liquidity, it's near about 158 handle. You don't need that much handle. Just if you get 30 handle, trust me, man, you will be profitable. So you try to understand this entry fair value, last fair value gap. You are going to use this as your bullish setup. These two fair value gap, you are going to use that your bearish setup. If you are bearish, it has to break the last fair value gap. It has to break it. If you are bearish and if you are thinking market is going to take that sell side liquidity, if you are bullish, you can frame your trade from there. If market come here, you just can't take buy until this last fair value gap is broken. If it is broken, then you can look for buy. Until it's not broken, you can't look for buy. Why? As I explained, the last fair value gap, hold the price, went higher. The entry fair value gap, hold the price, went higher. Hourly last fair value gap, hold the price, went higher. Lot of example I gave you. Okay, just watch my last video, you will see some example. I believe that it will help you to understand the power of the last fair value gap and how you can expect. Okay, either the price will reverse from the last fair value gap, or you will get the reaction from the last fair value gap. Now you can say that the reaction we don't care. No man, you have to care, because the reaction sometimes is near about 50 handle. So you can just hold your stop loss for 50 handle. Nobody can hold it. Okay, I don't believe it. Okay, so you have to be careful about the last fair value gap reaction. Last day I took a loss at the London session, because when it came to the last fair value gap, sorry, not last fair value gap, actually the new day opening gap, I forgot about the reaction, so I took a small loss first. Then I took re-entry, and that loss was near about $300, and the profit was near about $1,000. Okay, but I forgot that reaction thing. Okay, that's why I got stopped out. It happened actually over here, I guess, here to that candle. That reaction I forgot. So something like that. No, guys, I talk too much. I know. Is it clear to you? Okay, is Nasdaq full thing is clear to you? If it is not clear, you have to rewatch the video. I told that I'm gonna close my session within 1 hour, but it's already 1 hour and 10 minutes. Okay, I tried it to make more shorter. I'm sorry. Okay, I'm sorry. I couldn't make it. I'm extremely sorry. But did you get it? You have to tell me that you got the point. I mean, whatever I try to give you, is it clear to you or not? Uh, equal is equal to liquidity. Absolutely, absolutely, Elena. Hi, can you please explain about your service if 299 for different we get then free Y2 student? Do you run Discord as well? Uh, uh, Umair Bashir, brother. I mean that $299. I think you are talking about the membership. Okay, trust me, man. There is nothing. There is George, AAFX, Stephen. You can ask all of them. Okay, I don't give anything special to them. Nothing special. In my channel, there is nothing you will get by money. Okay, everything is free. I will never take money. There is nothing. There will be never paid something. Never ever. So actually, they took the membership. I believe they would love to help me something. I mean, appreciation. Okay, something like that. I'm really grateful to them, but yeah, something like that. I don't know why they took that mentorship. I mean, membership, but they are not going to get anything special. You can ask them. Okay, they are here. Stephen, George, AFX, everyone is over here. You can see the green names. They actually the member. So no man, there is nothing. Everything is free over here. So don't think that they are getting something special. And Discord, I'm not active over there. I'm just active in Twitter and YouTube only. So only YouTube and Twitter. Discord, I'm not active over there. Okay. And trust me, man, they are not getting anything special. Nothing special. Nothing at all. I'm just telling you in front of everyone. Okay. So you can ask them if you don't believe me. Yeah, something like that. Yeah, Steven. So yeah, something like that. $2.99 to support T2 for coffee. Something like that, brother. Nothing else. I feel very embarrassed when you guys actually ask me the question. But yeah, either way, I'm appreciating to guys who actually took the membership. But yeah, they're not getting anything special from me. So everything I'm just explaining here, it's free, man. It's free, perfectly free. So you don't need that membership things for getting something special. Whatever you are getting, it's free, man. So, bro, can you teach us about your losses in the market? And when I take the loss, I explain that in that moment. Okay. After, I mean, I don't like one thing. I mean, you will never see me to pick a price action and explain that. See how beautifully it works over there. No, you will never see that. Whatever I explain in live. Okay, when the price is printing over here, I love to explain the price action over there. The previous price action I don't like to explain, but yeah, if I take a loss, I explain why that was a loss, what I made, why I make a mistake over there, what should I have to do over there, I had to do over there. I explain that when I take a loss. Okay, so I mean, uh, beauty relax treatment. So when I will take a loss, I will explain that, brother. No problem. Just stay with me, brother. What do you think about FTMO? FTMO, man, I love the trading view chart. Okay, MT4 is little difficult for me. So I was a FTMO trader. I blew my account intentionally because I didn't want to continue that MT4. I blew it. I mean, by by declaring in my streaming that I'm going to blow my FTMO, because when I got that top step and I can use this trading view chart, I stopped trading any other platform. Okay, so I'm just using top step only man. But yeah, obviously FTMO is one of the best prop firm. I was my first prop firm was FTMO, and then the my forex fund. But you know the regulation actually stopped the my forex fund. Then I find out this top step, and I find out this top step because of ICT, because his son as was actually using this top step. So I find it out over there. That's it, Stephen. Yeah, that's it, man. Thank you, George, for the coffee, man. Okay, Stephen, let's support him. He is a good man for sharing his knowledge freely. I don't know I'm good or bad, but I'm trying to explain the things. Okay, and guys, you didn't give me the answer. Do you get the Nasdaq analysis or not? Do you get it or not? And I'm telling you one more time, everything can be changed by Sunday open, or this is just my expectation. Okay, I'm not telling it's going to happen. This is all my just expectation. The way I what to say, I mean, I learned to read the price action. This is the way I started to learn the price action, and for me until now it's working. Okay, for me it's working. It doesn't mean that it will work for you. You have to do the back test. You have to mark every single level. You have to do the back test. I mean, forward test. I never do the back test actually. I always do the forward test. Back test is kind of boring. Okay, it's kind of boring. Hey BP, how are you, brother? Thank you, bro. You are most welcome. But why you are giving me thanks, I forgot already. So, guys, please let me know that if you get the point. Please let me know that, man. Is it clear? The Nasdaq is clear or not? Let me know. Let me know. Stephen, thank you, Stephen. So you have already told that it's clear. Okay, Stephen, thank you. I got one confirmation from Stephen only that he understands the whole concept. Please, Lenny, George, let me know, brother. The analysis makes sense, brother. Appreciate it. Thank you, Sello Mahalaba. I guess you are new, brother, Sello, because I didn't see your comment. I'm trying to remember the names of my subscriber or of my family or of my brothers. Okay. Okay. Thank you, Beauty. Thank you. It is very clear. Thank you, George. Okay. So I guess I mean some of you when write it down that you got it clear. I believe that AFX. Yes, sir, clear. Okay, thank you. AFX, please don't call me sir, brother. Just call me brother, okay? I'm not sir. I'm a student like you. Okay? You are learning, I'm learning as well. So please don't call me sir. I mean I don't feel good or comfortable when you guys call me sir, boss, or something like that. I'm okay with as you brother. Okay? Where are you from? I'm from Bangladesh, brother. Very small country, Bangladesh. This week, I will spend most of my time Lenny. Thank you for for confirming that it's clear. Thank you. This week, I'm going to explain the thing is what to say. I mean the mitigation block. Okay, so I can give you a demo from the previous price action if you don't mind. Then I can give you a demo. Yes, sir, brother. Oh man. Okay, so it's the previous price action. So if you like, I can talk about the mitigation block little over here. Okay, here this is below this market. This is the mini S&P. Here I am above the market. Here it is the Nasdaq. Okay. Oh, okay. I forgot something. I will clear that as well. The last day, one guy actually asked me when I'm going to change my contract. So I will explain that when I'm going to change that as well. Okay? So I actually forgot it, but thank you. Don't just remind me if I forget that. I will show you when we should change our contract. I mean NQ8 to NQM, when we should change it. Okay, I will explain that after thinking. I mean after this mitigation block. Okay. So over here, low, high, higher low. Okay, so this is that mitigation block. Here the highest up close candle, so over here that is that up close candle. This is the mitigation block here. Just let me make it send it back. Okay, low, high, lower low, then it will be the breaker block. Low, high, higher low, this is the mitigation block. Now for me there has to be some rules, you can say. First thing is, it price has to reach either the entry fair value gap or the last fair value gap from 15-minute chart. This is the 1-minute chart. So first rule is price has to reach either a entry fair value gap or a last fair value gap from 15-minute chart. When it will reach to that 15-minute last fair value gap, then sorry, either the last fair value gap or the entry fair value gap, then if you look for the mitigation block, you have to open either the E-mini S&P. If you can open the YM as well, the Dow, you can use that one as well, that will be appreciated. But for me, E-mini S&P and the Nasdaq is enough. Okay, and you have to look for the S&P. Now if there is a buy side liquid, if there is no buy side liquidity, no entry. There is the buy side liquidity, I explained this high and that high, they are relatively equal highs. That was my buy side liquidity. I had the buy side liquidity. First rule is you have to look for the buy side liquidity. Obviously, as there is the buy side liquidity, what happened here, some of you can think this is the relatively equal loss, so market is going to take that loss, then it will give you the setup. Someone can think like that way, and this how you will miss the entry. Okay, you will miss that entry somehow like that way. In that type of situation, you have to understand the mitigation block. It is called the mitigation block. Low, high, higher low, not the lower low, higher low. If it is the lower low, then there is no confusion. Market has taken all the liquidity. Nobody is waiting to take that low again. Nobody is waiting for that. Okay, when market go and close above that high, when this is very important, guys, when body close above that high, then it will be the mitigation block. Price will come back again to that mitigation block. Boom. Here you can see market didn't reach to that mitigation block perfectly. Over here you can see it was very near to that mitigation block. You have to understand that sometimes it can you have to take entry close approximately entry. Okay, you can't wait for the perfect entry. 1 tick or 2 tick above, you have to put your target limit or you have to push your button, because most of the time you will see the mitigation block, the breaker block actually doesn't feel perfectly. So 1 tick or 2 tick just above from that block, it reverses. So you have to be very careful of that. Okay, and how do you know that market is not going to take that low? Because first thing, you have that buy side liquidity here, very clean buy side liquidity here. First rule. Second rule, market came to that entry fair value gap from 15-minute chart or the last fair value gap from 15-minute chart. Third rule, market came here, make the mitigation block at the same time. E-mini S&P has taken that things. Okay, over here look, this low has taken by that low. Over here this low didn't take by that low. Okay, so this is the SMT. You got the SMT here. E-mini S&P has taken already the liquidity. Market doesn't need to take that liquidity anymore. Okay, this is the correlation, or the sisters, they actually love to go all together. So this is going to be the mitigation block. If it went lower, then it will be the breaker block. When it didn't go low, then it's going to be the mitigation block. But it has to take that low over here for E-mini S&P. I don't know, guys, it's is it's little clear to you or not, but next week I'm going to give the most priority to the mitigation block. So next week will be very important. Not very important actually. It's gonna be all about the mitigation block. Okay, if I get any chance for that mitigation block, I will try to push my button toward that mitigation block. And you can see somebody will miss. I explained that, right? Market has taken the liquidity, market structure sheet, that was the fair value gap. if you take that entry, that was a very good run. But if anybody miss the entry over here, they can take their entry over there because of that mitigation block. And I don't know, guys. I mean, I don't know, I have no idea that you guys can understand my pronunciation or my word clearly or not, but I really try, okay? I really try so that you can get it. Okay, go ahead, Lenny. Okay, I'm going ahead, brother. Are you live every day? If so, what hours? Thank you for your knowledge. No problem, Forest. Look over here. This for you, Forest. Forest. Okay, this is my Twitter. Okay, this is my Twitter, and you can see rate of NRT12345. Guys, I'm not showing this because of my follower. You can see I have only 674 followers. I don't have a big followers, and I don't believe there's only 32 people. Maybe among the 32 people, 20 people is my follower over here. Okay, so I'm not going to get thousands of the followers from here. But the reason is to show you this Twitter is, if ever I come to live, I post it to my Twitter before. Okay, first I post it over here. You can see I spent all of my information, every very informative things over here to my Twitter. I believe that if you were with over there, you'll be more benefited. Okay, so at the rate of 12345, you will get the link to the description. If you want to follow me over there, you will get the notification or something. If I ever come for the live, I post it beforehand. Okay, so there is the link, that was today's live streaming link. Every single day, okay, if I ever see anything, I mean something like that, okay, mark the new day opening gap and see of new day opening gap, so something like that. So I did the tweet things beforehand. I was used to it before the YouTube. I am still with my Twitter. So please don't misunderstood me, man. I'm telling you this for my follower. I'm telling you this because I use Twitter more than YouTube. So if I ever come for the live, I tweet here beforehand, and I will try. I really try to come live every day, but sometimes I miss. That's all, brother. Okay, and you're most welcome, Forest. Mahi, you consider entry fair value gap as the one just above the last fair value gap. Absolutely, Mehi, absolutely. Just above the last fair value gap. This is the last fair value gap. Just above the last fair value gap, this is the entry gap. If there is two, three, four more fair value gap, I don't care. I will wait until price will reach to that entry fair value gap if I want to take buy. If market come here above, for example, just think there is three fair value gap. One, two, maybe there is another one fair value gap over here. Just think like that. So there is three fair value gap. Now you are thinking that market will go higher. Okay, so market is falling to this fair value gap. It gave you very nice setup over here. Fair value gap. I'm not willing to take my buy from there. Why? Because I don't believe in this fair value gap. This fair value gap, yeah, it has some job, but that's different. Okay, it's deep price action. I don't think so you are I mean you're ready yet to talk about this fair value gap. That is called the first fair value gap actually. So it has some other job. Okay, but here this is the last fair value gap, the entry fair value gap. Either price reach any of this level, I'm not looking for any kind of buy. Okay, so price has to reach any of those level. Thank you so much, you are very clear and precise. I understand you perfectly. Thank you first. Thank you, man. So guys, if anybody has any question, you can ask me. Otherwise, I'm gonna close my session for today. I tried to close it within 1 hour, and it's take 1 and 30 minutes. 1 hour and 30 minutes. I talk too much. I know. I talk too much. Oh man. Oh, by the way, last week my total profit was 1300. I mean $13,278. Okay, and to my 50K account, still I'm struggling over there. I mean, in Friday I got near about $1,900, and then it turns into $1,000 loss again. Okay, so I mean, it's very difficult for me to keep that 50k account because I'm now used with 150k account with bigger stop loss. So but yeah, 150k account that perfectly worked last week, and more than $10,000 use for me. And I have just passed 27 days. After 3 days, I will be able to take 100% of my profit. Right now, I'm getting actually 50% of my profit, and the rest 50% I have to keep it on my top step. So after 30 days, I'll be able to take 100%, and they will take 10% from my profit, and they will give me 90% of that profit. So that's for upgrading. And I know that I should not talk about the losing, but I don't want to hide anything. Okay, so that 50k express account, I'm really struggling with that. And I was greedy last day and Friday. After $1,900 in my express account, I got $1,500. I closed my express account, but in that 50k account, express account, I tried to make it more. Okay, so that I will be able to overcome my fear of losing or blowing my account. So I tried to get more, and I got chopped up. I got chopped up here actually. So to that specific run, that the same place, yeah, that is the place. The first run here, I got near about $1,900 over here because it was a huge run. I took my entry there and until here, yeah. So that was near about $51, but I got maybe 48 handle or something. So that was my $1,900 profit. Then I got chopped out here 2 to 3 times. I just blew my mind, and if they don't stop me within $1,000 loss, then maybe I would blow my account. Okay, so something happened over there. Over trading killed. Okay, I agree with that. I agree with that. I should have stopped when I got $1,900 profit. Then you know, but it is what it is. I'm sorry for that. Okay, I'm sorry. Oh man, now some of you will think, oh man, this guy is just crazy. He doesn't know how to trade. Okay, no problem. Okay, mehi ta. What does it mean ta? Here ta. Okay, may I really didn't get what does it mean. We'll see you tomorrow morning. I will follow you on X also. Okay, Forrest. I believe that I will be here in tomorrow morning. I believe. Okay. I can't promise, but I will be there. I believe that. Okay. Do you know why NQ is showing a different price than MNQ? MNQ and NQ has the different price, and that's why I don't trade MNQ. I mean the micro Nasdaq. I don't trade, and they are little different price. Okay, they're different, but why I don't know. I don't know. Really, I don't know. Oh, you already at the 90% level. That's great. Oh man, you're really smart. I love watching you. Thank you, Forrest. Do you know why NQ is showing a different? Okay, CW Pro. I guess I told you, brother. I really don't know. Okay, one more thing. I actually forgot, and that is this here. You should have reminded me when I'm going to change my uh, contract. Okay, so over here you can see the Nasdaq here. NQ is much. Yep. So here, yeah. So this is NQH24 March 24 and NQM 24 June 24. So this is the June contract. This is the March contract. Okay. So here I will look for the open interest and the volume. Okay, you can see the volume and the open interest. Both of them are bigger comparing with June contract. Okay. So here 16,000 and here 286,000. Here 16,000, 100, I think 100,000, something like that. It's bigger until these two thing is more than March contract. I'm gonna use March contract when the open interest and the volume will be much bigger than the March contract. I will change my contract to NQM from NQH. Is it clear, guys? Short for thank you. Oh, okay. So thank you, TA. Okay. Thank you. No problem, man. I'm little weak in English, man. Thank you. You're most welcome. Thank you. You're most welcome. So, guys, is it clear? You can see this is called barchart.com. If you go to that barchart.com, from there you have to select a commodity over here, I guess, or you can just search the symbol here in Q. If you search over there, or if you come here, I guess you will get it from there. Here, Nasdaq 100 E mini. See, S&P 500 E mini, Nasdaq. If you, just press Nasdaq, it will bring this chart in front of you, and then from there you will look for NQH and NQM. This is the volume, this is the open interest. Both of them are higher comparing the June contract. See, that's why I'm going to use NQH until it is higher than NQM. Okay, I guess um, it's clear. Okay, I believe that it's clear. I'm glad I started watching you. You showed me different styles of intra trades. The entry gap and macros trade is great. Thanks a lot. You are most welcome. Macro is too easy, man. Macro is too easy. Too easy. I don't trade macro. It's too easy. It's for, I mean, it's easy. Okay, guys. I believe that I gave you something, but trust me, don't take anything seriously. Please do your own analysis. If you get something different with me, don't don't be hesitate to take that. I always take my own analysis. Even if ICT come to me and tell me he's thinking market is going higher, I'm not going with him, because my analysis, I always believe in me. I always believe in me. Whenever I doubt me, either I took a huge loss or I just gone mad. Okay, so I always love to trust my analysis. Sometimes, when I do live trade, some of you tell me that now market is going higher. I mean, this type of distracting information you gave me. Whenever I doubt my analysis, I take loss. That's why I'm getting much more pressure when I trade in front of you guys. When I trade by myself, I showed you how beautifully I can trade. Okay, how many times I can take winning trade or something. But yeah, I guess this is, I'm new in this platform, so it's happening, and all of you are giving me the support. I believe that sooner I will I will overcome my fear, my pressure soon. Okay. But yeah, thank you. What's the significance of changing? You have to change the contract, brother. You have to change. Okay, because depending on the volume and open interest, you have to change the contract. Otherwise, you are not going to get the perfect price action. Until the price action, you have to get. I mean, if you would love to take the perfect price action, you have to change it. And when the open interest and volume is higher than the March contract, you have to change it to June contract. I mean, yep, something like that. Okay, you have to change. I mean, you have to change. Okay, that's the answer. Okay, guys, thanks for joining me. And please, if anybody is new, don't forget to subscribe to my channel. I got 4050, I guess, subscription last day. Let's make it. Let's make it 4100. Okay, so I got near about 8 subscription. That's cool, man. That's cool. Thanks for subscribing. Whoever subscribed to my channel, welcome to my channel. Do your own analysis. Do your homework. If you don't work with your chart, nobody can teach you this price action. Nobody, simply nobody, not even ICT. If you don't work with your chart, so please work with your chart. Spend time with the chart. Trust me, slowly but definitely. There is nothing who can or what can stop you from being profitable. You have to be profitable. There is no other option. There is no other way. Just don't give up. Work with your chart. Make it as your passion. You will be successful today or tomorrow. It will take little time. Don't think that you are here and within one day or 1 week or 1 month you are going to earn million of dollars. No, it's never going to happen. You have to submit the time. You have to submit your effort. You have to, you have to understand the process first. This game, this is just a game. If you understand the game, for example, as I told, whenever I took my entry, the first three entry I took as my losing entry. I know that it's gonna be the losing entry. Now, yeah, sometimes it's the losing entries. Most of the time, it's the winning entry. I'm happy with that. But I'm lucky because that was winning entry. But I think like that way. The first three entry will be the losing entry. So if it is a losing entry, I don't feel, feel bad because I knew it is a losing entry. This is the step of winning this game. I believe that very soon you will understand that as well. And I'm glad to have you all with me as it is Sunday. I'm I'm talking all of this shit, but yeah, I really feel good to see you. Some of you are well known to me right now. Some of you actually are very, very, very well known to me. I will never forget your names, never ever. Okay, and I want to know all of you. Okay, so please try to write something so that I can see your name. So if I can see your name repeatedly, I will never forget your name. And I really want to know every one of you. Including inside this 4059 subscription. I want to know every single person because that is for me. I need this from you. I'm not doing this for free. Trust me, I'm not doing this for free. You have to pay me. You have to pay me 200k plus USD. You have to earn this money by yourself. Okay, by yourself. You have to earn this money 200k plus USD. And trust me, it's not huge. If I use three accounts, just for example, if I would use three accounts, I just used one account. I'm using one account. So from one account, just think $10,000 I got from 1 week. In 4 week, approximately, just for example, for week, I can earn maybe 25,000 to 30,000. Let's make it 25,000. So in 1 month, if I get 25,000 from one account, if I use the copy trade, if I use three account, how much it will be? 75,000 in 1 month. 1 month, I am going to earn 75,000. How long it will take to earn 200k plus US dollar to earn? How long it will take? It's not huge. If you think it's huge, I just choose that that number with very consciously, okay, with very confidently, because this is the lowest number. This is the lowest number you can earn. I could make it 200 to 2000k, doesn't matter, but this is the lowest number. So please earn this money. Send me the plane ticket to visit your country. That's my dream. I would love to visit your country. Please don't make me a failure. If you fail, I'll be the failure. I never fail in my life. Never ever. Alhamdulillah. In any cases, I never fail. I took this as my challenge. That's why from the beginning I'm telling you, every single person in this social media will keep something inside of them because they have another plan. They have the mentorship plan. They have maybe some paid program plan, something like that. I will never do the paid program. I will never do the paid mentorship. Some of you ask me to my Twitter, to my YouTube, to my Instagram, WhatsApp because of the mentorship or something. I will never do the mentorship, paid mentorship, never ever. Everything I'm going to give you free. Whatever I understand, I will give it to you free for free. Okay, please earn that money. Send me the plane ticket. Okay, if you can earn 200k, I believe that $1,000 is not going to be a big deal for you. Ah man, I'm going to share your channel with everyone I know. Okay, Forrest. Thank you, man. That will be appreciated, man. Thank you. So, guys, I believe that you will understand my fact. You will understand my thinking, and I always try to be honest with you guys. That's why I share my losing entry as well. I'm not a social media guy. Like I saw most of the social media person, they don't share the losing entry. But I feel if I just keep posting my winning entry, you will expect that okay, I have to take all the winning entry because this the guy I'm learning or I'm just watching his video, he never take the losing entry. So I don't want you to think like that way. You have to understand that losing entry is the part of this game. That's why I'm sharing my losing entry. I'm sharing my winning entry. I'm sharing my profit to my 150k. Okay, there was nothing. If I just hide that, I took $1,000 loss after getting $1,900 profit to my 50k express account. If I just hide that, there was nothing wrong with that, right? I didn't need to tell you that I took $1,000 loss, but I told you that because it happened to me. I try to be honest with you guys. Maybe some of you will leave me because this guy took $1,000 loss after 1,900 profit for over trading. So I'm gonna leave this guy. Yeah, you're welcome to leave me. No problem with that. But this is how this thing work. Okay, I'm a human being. Sometimes I blow my mind. Sometimes mental situations. Sometimes I forgot my own rules. I don't follow my own rules, and I it I have to pay for that. It happens sometimes. I blew account. Okay, it doesn't mean that I never blow my account. No, man, I blew my account. One, two, three account I blew unintentionally. I tried to keep them, but I blew it. Right now, I'm struggling with 150k express account. I'm struggling with that to keep it. Now it happens, man. So don't think. Now you can ask me why you are struggling with 50k account, because I'm used to with 150k account. I mean, daily loss limit is $6,000. Okay, so I'm just trying to cope up with 150k account with 50k account. 50k account, I have the extreme loss limit is $1,000. It's like, I mean, the problem. I'm used to take more longer stop loss, but when I'm trying to do that to my small account, I feel afraid. Okay, if it hits me, then I will take maybe $600 loss, where my maximum loss limit is $1,000. Now you can say, brother, why you don't go to MNQ? MNQ price is totally different with mini Nasdaq, so I can't trade the MNQ. That's why I don't go over there. If I could know how to trade, I mean, how to read that price action, as that is different, I can't do it. So guys, this is the true things. Okay, this is the honest things. I don't know, I should have I mean shared it with you guys or not, but I feel like if I share it with you, then you will be confident that it happens. It's natural to take the losing entry, to blow the account. ICT himself blow so many accounts. Okay, when I just blew my first account. I told myself ICT blew his account. It doesn't matter. Yeah, I would have blown maybe 50 to 60 paper trade account. To be honest, I started the paper trading. I went to the trading panel. I mean, I connect the paper trade. I make it in that time. Actually, I had what to say. Hmm, I had the FTMO. I guess FTMO or what to say. Uh, my forex fund. I don't remember. So over there, when I started that FTMO, when I first blew my account, I came here and I reset my account to $10,000. Okay, so there was the $10,000, and I blew maybe 50 to 60 account of the paper money. Now I didn't blew my real money. I just blew my paper money. But that's the same case. Perfectly same case, man. Okay. There is no Telegram channel. No Telegram channel, brother. I have just what to say. This Twitter. You can see. I have this Twitter and I have this uh what to say. This YouTube. This YouTube and this Twitter. I have only these two things. I don't have anything else, brother. I'm sorry. Trigger 550. I'm just with these two. I have the Discord actually, but over there I'm not active. Active. I'm a single person, so I have no time to maintain everything. Okay, thank you guys for joining, and thank you for listening my rubbish word. So happy weekend, guys, and I guess tomorrow we will meet again at 9 a.m. New York local time. Until then, cheers.